Okay, so good afternoon and welcome everyone. My name is Wojciech Rzadkosz and this is Technically Speaking, How Does Bitcoin Actually Work? In the past seminars we've covered a lot of topics starting from fundamentals, blockchain and mining, and then moving on to Bitcoin addresses, transactions, wallets, block explorers, forks, exchange platforms. And today we will be talking about tax and regulation and some best practice. Before we start, as usual, I'd like to give a shout out to Greenpark, where we are currently. It's a good community-driven, not-for-profit co-working for small and medium businesses, so check us out. I can share the slides, so if you leave your email with me again, I'll be able to send those slides to you. And there's a survey, as usual, just to let me know how I did, so potentially I can improve for the future. And Q&A at the end. Okay, so tax and regulation. A few kind of disclosure to start with. The cryptocurrency is still broadly unregulated in the UK and worldwide, so just bear that in mind when we're going to be going through this. This is not a professional tax advice. I'm not a tax advisor, tax person, or accountant. The advice I'm going to give you comes from my personal experience with trading cryptocurrencies and having to deal with taxes. So I did talk to sort of tax accountants who have expertise with dealing with cryptocurrency tax, and I researched a lot on my own online. And all I'm going to tell you, it applies to UK only. So I don't know, there's obviously for every jurisdiction there would be separate tax rules. So how can governments regulate Bitcoin at all? No government has any power over the Bitcoin network itself. However, parts of Bitcoin ecosystem can be regulated within government's respective jurisdictions, and so they can regulate mining Bitcoin. They can regulate use of Bitcoin in commerce, exchange platforms, but only those who are registered in the UK, and there's not many that are registered in the UK or the US. There are purely online businesses, so they can register anywhere they like, where it's most convenient for them. Financial instruments based on Bitcoin. So those are the things that governments can regulate. So Bitcoin, you can have income in Bitcoin, or you can profit from using Bitcoin in many ways. One way is to use it as a form of payment, and that is legal in the UK. And you have two options if you want to use a Bitcoin as a form of payment, if you are a merchant or you provide service or product to anyone. You can use a third-party payment facilitator, processor like BitPay or BitGo. There's probably plenty more. And they give you an option to convert your Bitcoin immediately into sterling. In that case, it's as if you accepted sterling in the first place, so there's nothing new. The payment processor, they take care of all the hassle related to tax with Bitcoin and all of that. For you, as far as you as a merchant is concerned, it's just another sterling payment, because customer pays Bitcoin, but you get sterling from this payment processor. So there's no capital gains tax to be thinking about. You can also accept Bitcoin directly, and this is a cheaper way of doing it, because you don't have to pay. Obviously, the payment processor is a middleman that you have to pay for service. When you accept Bitcoin directly, you don't have to pay for the service to anyone. You're only accepting Bitcoin, so you're purely using Bitcoin network. But when you do that, you're really facing two choices. You can either, at the end of every business day, transfer the funds and exchange them into sterling right away, and in that case we're back to the same situation where we don't have to worry about anything else, or you can hold on to Bitcoin, and in that case capital gains tax will be due when you're disposing of this Bitcoin at a later date. And it's important to remember that there's no change to when revenue is recognized or how taxable profits are calculated. So if you accept Bitcoin, you still there's still income tax to be paid on just the fact that you sold goods or services to someone. With regards to the VAT, HMRC said that the VAT will be due in the normal way from suppliers of any good or services sold in exchange for Bitcoin or other similar currencies. And the value of supply of goods or services on which VAT is due will be the sterling value of the cryptocurrency at the point of transaction taking place. And they actually specify a couple of activities that are outside of scope of VAT, which is mining, both block reward and transaction fees, and exchanging Bitcoin for sterling or other foreign currency. It only is, I think, common sense to have mining outside of scope of VAT, because I can't imagine who would you charge this VAT to if that's the network that pays you their mining reward. HMRC haven't really issued many documents regarding Bitcoin and tax treatment, and the latest one is this one here from 2014, and they haven't really updated it since. So it's when we're dealing with cryptocurrency tax, this is really the only official document that we could be referring to. Capital gains tax. When you make a Bitcoin, when you transact in Bitcoin, important kind of one thing that distinguishes it from other transactions is that from normal currency transactions is that you need to think about capital gains on the Bitcoin if you hold on to the Bitcoin, and the capital gains is due when this asset appreciates in value between when you acquired it and when you're selling it, or dispose of it, and that's a key word here. And in some circumstances, capital gains tax will be included in your income tax or corporation tax. We'll talk about that in a minute. So what does disposing of an asset mean? It means either selling the asset, gifting the asset to someone, or even swapping the asset for something else, for other asset, like Ethereum and other cryptocurrency. So that is something to bear in mind when you buy Bitcoin and then you exchange it for other cryptocurrency, because that triggers, this is a sort of tax triggering event, just the fact that you're swapping it to other currency, cryptocurrency, without you even selling it back to pound sterling. So how are Bitcoin capital gains taxed? And that depends whether you are an individual or a business. If you are an individual, you will need to establish whether you are a trader, you or your accountant will need to establish whether you are a trader or a non-trader. Non-trader would be equivalent to like a holder of, if you hold cryptocurrency for longer term without trading a lot of it or doing a lot of trading activity. When you are a trader, you will be due income. Your capital gains will be included in your income tax at 0, 20, 40, and 45%. And if you're a non-trader, you will just pay capital gains tax at 10 or 20%. So notice that HMRC have vested interest to prove that you are a trader indeed, because they can charge you much more tax if they prove that you are a trader as opposed to non-trader. If you are a business, then it's fairly simple. It's just included in your corporate tax at 19%. So who is classified as a trader? So there's no clear guidance from HMRC. They're very vague, but we can gain some precedence from previous court cases of where traders or people were trading assets other than cryptocurrency. And in those cases, there was a few criteria that judges were looking at to establish whether someone was a trader or not. They were looking at number and frequency of transactions, holding assets for short or long term, how much time you spend trading, and whether you're trading on behalf of anyone else or just managing your own portfolio, and whether you're using brokers' advice or making your own decisions. So all of those things, being very self-sufficient, trading on behalf of anyone else, lots of time spent trading, short-term trades, and spending a lot of time trading, typically a few hours a day, that would indicate that you're a trader. But there is no black and white. There's a lot of grey area. There's no clear distinctive lines or tests that you could make to establish whether someone is making enough transactions to be considered a trader, or whether someone is spending enough time to be considered a trader. It's case by case basis, so it's very murky. So a few examples just in case this isn't clear. If you are considered a non-trader, and say you buy one Bitcoin for £3,000 and sell it for £6,000, then you have capital gains due on the £3,000 taxable profit. If you buy one Bitcoin for £3,000 and exchange it for 10 Ethereums when one Bitcoin was £6,000, and you hold on to the Ethereum, you are still due £3,000 of capital gains tax. Capital gains tax on £3,000 of profit. Because this is the swapping case, you swapped it for another asset, so you disposed of Bitcoin effectively. And if you're considered a trader, you deposit £3,000 on your currency exchange, you trade various cryptocurrencies for 6 months and withdraw £6,000 at the end of it, so you have £3,000 of profit, and that will become a part of your income tax. Obviously those are very simple situations. There is lots of grey areas and lots of much more difficult and complex situations where it's not very clear which group that you're going to belong to, and at what rate you're going to be paying tax. That's why it's important to understand it and just seek professional advice whenever you're dealing with cryptocurrency tax. If you are a business, you say you accept Bitcoin as payment and convert immediately to British pound, and so from that situation there's no capital gains to include in your corporate tax. If you accept Bitcoin at £3,000 and keep that Bitcoin, and at the end, at your company's year end, it's worth £6,000, you potentially incur £3,000 taxable profit, and that would go into your corporate tax. And if you are a trading business, you deposit, that's a similar situation to the individual trader, where you deposit £3,000, you trade various cryptocurrencies, and you withdraw £6,000, assuming that you're not left with any cryptocurrencies. You will have £3,000 worth of profit, but that will come down as corporation tax instead of income tax. So there's 19% rate. There is this thing that HMRC really kind of open avenue for claiming that your Bitcoin investment was so highly speculative that you consider it gambling, and gambling isn't taxable or any losses relievable. So they did say that in their sort of brief 9 in this document, and that again just opened many more grey areas, and people trying to sort of claim that it was highly speculative and therefore they're not due any tax. But because the HMRC did not clarify what constitutes a highly speculative transaction, it is not unreasonable to assume that they will attempt to argue that losses were highly speculative, therefore your losses are not allowable for any tax relief, and gains are a taxable profit, because that's obviously in their interest to do that. Is there a financial or equivalent of financial services compensation scheme for Bitcoin? No, there isn't. Bitcoin is a purely decentralized, and there's no authority that has any control over it, and there is no scheme that can refund your money in case you lose it in any way. So if you lose your Bitcoin, there's no company to turn to to recover your loss. So you there on your own. That's a tough truth. And whether a tax relief is possible from allowable loss, and although HMRC did not address that directly, there's two ways you can lose Bitcoin. You can either lose access to your Bitcoin, say you lost your private key and you don't have access to it anymore. Theoretically, that should be an allowable loss, but the practicalities of it is, how do you prove that you lost access to your private key? Or how can they prove that you didn't? So you would need to seek professional advice to resolve that. I don't really know how you would approach proving someone that you lost your Bitcoin. It's easier if actually you were scammed in a way online and you got your cryptocurrency stolen, because there is ways to prove that your cryptocurrency was stolen from you in certain situations. And if you have a police report regarding your theft, that potentially could go down as a allowable loss, and you'd be able to offset your tax. So that's another quote unquote from their document that they published. Whether any profit or gain is chargeable or any loss is allowable will be looked at on a case-by-case basis. So the bottom line here is, keep a good record of all the transactions and their sterling value, and just be on the safe side. And in case you get a tax inquiry, so you can sort of show a track record of your transactions, and so HMRC can understand how your tax affairs are, and whether you are correct in filing your tax. So best practice on Bitcoin in general. So what I did, I went back through our previous sessions, and I picked the ones that are most relevant to you as a sort of average user of Bitcoin, and sort of synthesized 3 advices for each of those areas. They're highlighted in red and yellow. So for Bitcoin address, top 3 advices from me: encrypt your private keys for cold storage. So remember that you can encrypt your private key with a password. If you don't, then somebody who gets hold of your private key, they can spend your Bitcoin easily. Advice number 2, use a multi-sig address for added security. So there is many different schemes that you can use, or ways that you can use multi-sig address to have better security of your large amounts of Bitcoin that you're storing. It's probably not so important for smaller amounts, but it does certainly add a layer of security if used correctly. And advice number 3, don't recycle Bitcoin addresses, and that's both for security and increased privacy. So don't recycle Bitcoin addresses means to keep generating new addresses for new payments and new change addresses. That some of that wallets will take care of for you, but sometimes you have control over it. When it comes to wallets, choose a wallet with dynamic fees over static. So there is still some wallets that have static fees, and these are you can typically save a lot of money in transaction fees if you choose a dynamic fee. So just something to avoid. Keep a copy of your passphrase offline, and that's a paramount for security. If you're backing up your wallet, you will typically get a passphrase. It's just critical to keep it offline. Don't store it on your Google Drive or anywhere on actually online enabled device. The best practice is just to print it out on an offline printer and just put it somewhere at home. Keep a record of your old private keys or passphrases, and this is just to make sure that if you receive some late payment much later on, and you've changed your wallet or whatever, it's just to make sure that you can always get access to your old accounts in case somebody sends you Bitcoin, because there's no such thing as kind of making an account invalid. So there's people will always be able to send money to this account. It won't get returned to them, so they don't expire. So if you don't have private key and somebody sends you money, you're not going to be able to get that, to recover that money. Forks. Take ownership of your private keys before a fork. So if there is a fork expected, and that would require you obviously to sort of follow what's going on in the blockchain space. And if you care about the new asset or the new cryptocurrency that will be created potentially after the fork, take ownership of your private keys before a fork, because if, say, you have Bitcoin on a cryptocurrency exchange, they won't necessarily, there's no guarantee that they will credit this new asset to your account after the fork. Whilst if you have the private key, you'll be able to do that regardless. Don't make transactions around a fork time, and that's just because it's quite it's a lot of going on around the fork time, and there is some vulnerabilities that I didn't talk about. So just to stay safe, just don't make transactions if there's a hard fork expected on the Bitcoin network. And empty your wallet before claiming any forked coins. And this is to make sure that you don't expose yourself to some sort of risk of getting your private key hacked, and whilst you're trying to claim the forked coin and losing the one that can be actually more valuable from the same wallet address and from the same private key. And exchange platforms. Do your due diligence before signing up. So research, if you're planning to sign up for a trading platform, research it online, see how long they've been operating for, whether they have good track record of withdrawals, because this can be sometimes a problem. This is a red flag if companies not withdrawing timely money to their customers. I guess the best thing to do is just your platform XY and XY platform XY plus scam in Google, and that should come up with some potential news or whatever. There is you need to be aware that there is lots of people just shouting scam at every corner, even without reason. So you just need to kind of filter through the websites that you are going to find. Pay attention to daily trading volume and liquidity. So this is really part of your due diligence and part of researching a trading platform. You want ones most likely with high liquidity and high trading volume, because that will ensure prices of cryptocurrencies most reflective of current market state. And don't use exchanges for storage. So if you're not trading, just take your money off the exchange, put it in a wallet, and this is when you have true ownership of your money. If it's on this exchange, the truth is that you only have access to it as long as the exchange will grant you the access, and if they don't, then you will have trouble recovering your money. And lastly, tax and regulation. So this is a bit of a repeat of what I said before. Seek professional help with this. So don't take anything what I said for the ultimate truth. Do your own research, and then seek professional help, accountants or even lawyers if you need to. Remember, Bitcoin is not anonymous. it depends how we do it, but generally, especially if you're using the centralized exchange platforms, with all the KYC and AML, it's completely non-anonymous. It's very actually transparent, and keep a record of all of your Bitcoin transactions and their pound sterling value. And this is just to make sure that if a taxman comes inquiring, you are able to produce a proof of all your tax calculations and validity of them. So that's about it. Some references that I used in general for the entire series. Obviously, the most importantly, Bitcoin white paper. So this is where everything started, by Satoshi Nakamoto publishing Bitcoin white paper back in late 2008, I think. And Bitcoin kicked off in early 2009. Mastering Bitcoin by Andreas Antonopoulos. It's a very good technical book, which really I get most of my technical understanding of Bitcoin from, and I used it a lot when I was researching for this series. So if you want a more technical understanding of Bitcoin, this is a really good book, although he does have good balance also of explaining it as if you were five, as if you didn't understand anything, and he kind of takes it from the basics through to quite advanced stuff, much more advanced than what I was talking here about. This document that I was showing you before on HMRC, Bitcoin and other cryptocurrencies, this is really the latest guidelines from HMRC. And I just cut a shortcut here. Instead of giving you a lot of links and resources, this is one link that contains hundreds of resources on Bitcoin, and this is being maintained. It's actually open source. Anyone can sort of add some suggestions there, but it's maintained by a former BitGo developer, Jamison Lopp. He keeps it quite neat. It's nice and there's categories, and you can find a lot of useful information under that address. So thank you kindly. Welcome to the Bitcoin community. And any feedback you might have regarding this presentation or the previous one, the entire series as a whole, or if you have suggestions about future meetups, do let me know, drop me a line. I'm happy to take that into consideration. If you got any questions now regarding this or anything else, I'm happy to answer.